VOO and SPLG are two popular exchange-traded funds that track the S&P 500 index. But they have some key differences. To determine which one performs better, we need to look at their underlying structure, fees, and historical performance. First, let's start with the basics. VOO is offered by Vanguard and SPLG is offered by SPDR. Both funds track the S&P 500 index, which is a market capitalization weighted index of the 500 largest publicly traded companies in the U.S. This means that the funds hold the same underlying stocks, but the way they are structured and managed can affect their performance. One of the main differences between VOO and SPLG is their fees. VOO has an expense ratio of 0.03%, while SPLG has an expense ratio of 0.03% as well. This means that for every $100 you invest, you will pay 3 cents in fees per year for both funds. However, it's worth noting that SPLG has a slightly higher tracking error, which means it may not track the S&P 500 index as closely as VOO. In terms of historical performance, both funds have performed very similarly over the long term. Since their inception, VOO has returned around 10% per year, while SPLG has returned around 9.9% per year. However, it's worth noting that past performance is not a guarantee of future results, and there may be periods where one fund outperforms the other. When it comes to trading volume and liquidity, VOO has a significant advantage. It has a much higher average daily trading volume, which means you can buy and sell shares more easily and at a better price. SPLG, on the other hand, has a lower trading volume, which may result in wider bid-ask spreads and higher trading costs. In conclusion, both VOO and SPLG are solid choices for investors who want to track the S&P 500 index. While they have some differences in terms of fees and trading volume, their historical performance has been very similar. Ultimately, the choice between VOO and SPLG will depend on your individual investment goals and preferences. If you prioritize low fees and high liquidity, VOO may be the better choice. However, if you are looking for a slightly different investment structure and are willing to accept slightly higher tracking error, SPLG may be worth considering.